All right, welcome back to Liquid Sundays, everybody. It is Sunday, June 28th, and let's just jump right into today's class. So, I have the weekly chart of the SPX. I did post some levels on X and in the Discord, just a little top down monthly, down to the hourly and even the 15-minute. So we can use those as reference as we start going into the chart here. But here's just some notes that I posted on Friday about overall kind of market conditions and what we kind of want to favor, what maybe we want to stay away from and maybe lighten up on. So equal weight tech has broken down versus equal weight S&P. Technology is technically neutral. Expect short-term consolidation, pullback into mid to late July. Rotation is constructive. Leadership broadening into healthcare, financials, industrials, and discretionary, supported by lower crude and softer yields. S&P year-end target can still make new all-time highs above 7,700, but near-term markets likely choppy as tech weakens. QQQ coiling in a tight range. Watch support 704, then 685. Semis, SMH remain in an uptrend but stalling with negative momentum divergence, trail stops rather than chase. So overall, healthcare, especially pharma breaking out and leading the rotation, equal weight healthcare versus tech ratio has reversed higher. Overall, favor healthcare and other strengthening sectors over the next few weeks while letting technology consolidate. All right, so we'll start on the monthly here. And I'll just go over some of the notes that I posted in Alpha Alerts already. So, as you can see, resistance. This is the cash session. So right now we're trading up higher, which is um, we can look at that in one sec here, but let's just go over some of these levels here. So S&P cash on the monthly. Let's just do this. Excuse me. So you got previous month high. So we're almost at the end of June, and we'll take a look at June once it's complete. But for right now, we're looking at around 75.99. We can just call it 7,600, and then obviously the support down here is 71, 74ish. We'll just make this a little bit bigger so you can all see how I got to where we're at now. We'll just leave that there. All right, 71.75, good enough. All right, so we kind of been talking about, our monthly pivot around 73, 85, 86, 87, this whole level here, 50% retracement of previous candle, and support down to 71.75. But if you look at the weekly chart here, what's really interesting is, if you reverse this here, you've got almost a perfect retrace down to the 1618, which was kind of beautiful. So this is the SPX cash session, and we did almost a perfect breakdown of our support level, and we tagged that 1618 level. So right now we are trading. If you look at the futures market, let's go to the daily first. kind of brought this up in the notes here. So Monday into Tuesday, had this gap down. So pretty much Tuesday to Friday, we were trading below our support level, and we're trading, between the extension and support, right? So we're still focusing on this level here. Um, and if you take basically just Friday's candle right now, which is this candle right here. Make it a little cleaner here. All right. And, we did close above 50%. I'm sorry, we closed below 50% of Thursday's candle. And if you look at that real quick here. This was Thursday's candle. We didn't quite get down as far as the extension down below support from Thursday's candle on Friday, but we did close up above this 786 level. If you were to inverse this chart here, um, if this chart was flipped, this would be a good spot to reverse from. So right now, basically, the way that I kind of wanted to view, where we're heading into the overnight into tomorrow is, we're basically trading back up into 50%. Hold on, let me just take this. This is Friday's candle here. All right, so we're up over 50% of this candle here. So I'm I'm expecting to trade back up into, um, you know, pretty much the pivot, which is 73.85. We'll just call it 73.85 to 73.90-ish, something like that. And that gets us back to the resistance of Friday's candle. So if we can break out from the resistance of Friday's candle, obviously we look to the levels to the left here, and we'll start looking for 74 20, 74.30, and then fill the gap, eventually back from last Monday, which is around 74.72. So if we should fail at resistance, we'll just mark this, 73.43-ish level as kind of key support for, let's say, overnight into tomorrow morning. And then if we break down, we'll look for some of these levels here on the downside. But let's take a look at QQQ because this is kind of what we were focusing on here. So I've already kind of drawn some channels here. We've got overall bigger, this is an hourly chart here, and this is electronic trading hours. I can put regular trading hours on a little bit cleaner. So we got resistance up here, right? All-time highs on QQQ. And then we've got support down here, and then another kind of more intermediate short-term trend line resistance here. So we're looking, basically we were looking to hold, last week we were looking to hold that like kind of 704 level. And we did, we closed, if you look at Friday's candle here, we closed, let's see here, closed around 706, 706.52, I believe. We put in a little low, 702. We dipped our toes below that level there, but we did manage to close up above kind of this key support here. So worst case scenario, if this does continue to break down, lower trend line on QQQ, we're looking at 685.86 for kind of a more significant support below this key support. But we can just draw a line like this. And if you're trading, above or below 704 or 705 ish, probably most importantly 702, since we put in that that low kind of right, that wick that came down below there. And we'll look at this range here if you're looking to trade the Qs, but might get some more consolidation on the Qs. Seasonality, whatnot, kind of dictates. But we do have, on the Stock Traders Almanac, we do have a couple bullish days. The Monday is slated to be bullish. First trading day of July is bullish. Do keep in mind we have a shortened trading week, 4th of July, holiday weekend. So 4th of July is on Saturday. They're going to observe it on Friday. So we're trading Monday through Thursday this week. I will probably do a live tomorrow morning. I'll create an event for it if you want to come hang out. And yeah, so if you want to focus on some of the sectors and stuff that we're talking about here, healthcare, biotech, we can look at some of that stuff. There's some other areas that we might want to focus on: financials, industrials, discretionary, stuff like that. So, but right now, we'll just look at the SPX 500 and just show you kind of exactly what we're talking about. So we're trading above, the breakout level from Friday's plan, and there's our pretty much our pivot, right? Our monthly pivot, 73.85. So it kind of simplifies, what we can focus on right now as far as trading into tomorrow. I know there's some, geopolitical stuff going on. I don't know if it's going to affect us too much. Obviously, there were some strikes after the bell and this weekend, and I'm not really paying too much attention to it. But it did affect, short-term price action. I'm sure this was related to it here. There's also rebalancing. So that was end of the month rebalancing. Basically, kind of just some whipsaw moves. The VIX is higher. We did have some volatility in both directions last week, so I think we can expect some more volatility. But I wouldn't get overly bearish right now. I do think that there's going to be some consolidation for sure in tech. So SMH, particularly, something that where we were kind of probably more focused on going long. If we take a look at it real quick here, might be getting a little stretched at this point. And if you're long, you may want to trail stops. Take a look at SMH just for ha-has here. So this is the monthly candle for June. All right. So let's just let's snap some fibs on this. Here it was previous month on SMH, and we almost broke out and tested our 1618 level here. So now you got a wick basically coming back down below our breakout level here. 50% of that candle there is going to be, this is going to be actually a really nice level to watch on SMH. So 50% of the May candle, monthly candle, and we're going to call support for June unless we break down below this 557 level. We'll call this support here. So on SMH, in that sector, in that ETF, rather, we'll look at, some of these levels here on the monthly. So this is good stuff to take notes on, right? Because this is where a lot of the leaders that have been pushing the market higher are located. So 613, we'll call it 613.50. We'll call that our pivot on SMH. 672 is our resistance level, and 555 is our support. I don't want that. Let's take a look at the weekly. Hold on. All right, weekly. Get a little bit more closer look here. Weekly levels here, obviously resistance the same, 672. But we'll call the pivot here 639.50 from last week's candle, and support is 606. So if we take a look at the daily level here, much tighter range here, right? Here's Friday's candle. So when you look at some of these levels here on lower time frames, obviously the trades get more actionable, like near term, right? But we want to look at what the significance is of the higher first, and then zoom in on the lower time frame. So 615 is 50% of Friday's candle, 621 is the resistance, and 608 is our support. And then, break down below 608 is around 600. First, we look to this wick here from Wednesday, and then we go back to the previous Friday, 602. So the extension breakdown of SMH is around 601. So if we see weakness in SMH, we'll look to see if the Qs start showing relative weakness. And then obviously we can focus on some other things. So XLV is our healthcare sector here. And these levels here we drew out, I think, I don't know, maybe a couple weeks ago. Let's just take a look at last month's candle here. So here was May's candle here, right? Here's a pretty good example of, we were talking about focusing on XLV, some names like Lilly. You can see here breakout of our resistance on the XLV, and we surpassed the 1618, and we basically are right at around all-time highs. So I think this is a really good sector now. We're about to close out the month. Pretty wide range here, but you can see if we want to use for a monthly pivot, 152 as our, we'll call that our support. Obviously your support is at 144, but such a wide range candle, we're going to use our pivot as our support. So 152.76, and then resistance right here back at all-time highs. So if this thing breaks out, you can see it looks almost like a IHS here. Here's a left shoulder, here's a head, here's a right shoulder. Strong close at or near all-time highs. If we push back up over this, you can see that this monthly breakout 1618 is around 170. Let's take a look at the weekly here. Take the weekly candle here. $154 is going to be our 50% level. Basically, when I look at stuff, I kind of look at support, resistance, and pivot, and these are kind of like the three main levels to go off of. But if about a lot of my teachings, I focus on, fib retracements to like 618 and 786. So 786, 618. This is our golden pocket here. If we reject at the 786 level, that's usually a nice reversal signal, and we usually will try to trade that back down. Obviously the 618, but potentially the 50% level. Um, but if we close, up above 618 on the other side of things, we look to trade it up into the 786 and then the resistance here. Really good level to, um, kind of monitor even in day trading, intraday, on, 15-minute charts, 5-minute charts, stuff like that. You'll notice that price makes stops and wicks and reverses and continues off at these levels here. So for XLV weekly pivot, obviously 154, but we'll call that, again, we can call that support, and 160. So you got a pretty nice kind of range here. And then if we look at the daily level here, strong daily candle here on the XLV. Get a little bit tighter here. We're looking at 158.50 as our 50% mark. 156 is our support. 168.68. So if you see, mark these levels out, put alerts on. If you got, I got them, in trading view, whatnot. But if you see healthcare, XLV performing, you can look to play some of the stocks. You can see basically Lilly 7% on Friday, J&J 4%, SYK, ABBV, Merck, AbbVie 420. So if we can focus on, strength, versus trying to fade tech, that's usually kind of a better course of action. Playing to the downside, no problem. We do it every day, but it's a little bit more. It can be trickier, right? You can see here. Look at the semis. Some of the weakness here that we have: AMD, Micron, AVGO. This was all on Friday. So pressure, obviously, Nvidia was down. 70% of the index. So that's going to weigh on the entire thing. Microsoft. I think Microsoft is worth looking at. I said, let's take a look at Microsoft on Friday. Let's take a look at it right now. All right. So a lot of people were saying, oh, maybe we got a little head and shoulders, right? Left shoulder, potential head, maybe a right shoulder. But this is pretty important support here. This is I'll just show you why it's so significant here. So here's the monthly chart here, and if we take this trend line going back all the way back here, right, we've got multi-year trend line, which is significant. So we had a obviously big bounce at this level on Friday. Here's the weekly candle. A lot of volume. This is kind of interesting here. This is weekly chart here, and a lot of volume and not a lot of confluence on this weekly candle, right? Let's take a look at the daily here. And then on the other side of things, again, a lot of volume on the daily candle, and we bounced, and that's what we want to see. Price and volume in alignment. So, if we want to take the weekly range from So this whole range here, going back to last September here. So 50% of this, obviously, you can see we put in, swing high on this weekly chart here that I'm showing you, and then swing lows down here. We bounced to 50%, and then we came back down and tested support here. So very critical support. If this is broken on a weekly basis, then I would look to fade this, maybe down to 316, something like that at the very least, and then continue to look for potential weakness. But Microsoft is one of those companies where we're basically trading right around. Let me just bring up the moving averages here. Here is our. Let's bring this up here. Hold on. If I can find it. It's right here. Sorry. All right. So let's just bring up, that's the 9-day, but what I wanted to show here on this weekly chart is this 200-day. All right. So here's the 200 simple. And, if you look at history, we'll get rid of our trend line here so it's a little bit cleaner. I'll put it, yeah, we'll just erase this for now. All right. So, going back to October of 2012 here, Microsoft generally bounces at its 200-day simple moving average. So this is an excellent location here. You can see there was like a double bottom here in November 2022, that bear market. October we had the bottom, and then excellent risk versus reward here at the 200. Again in April, tariff gate 2025 came down to we didn't quite cross down below it or touch it, but we came pretty close. And obviously, right now, we are below it. But I wouldn't get too bearish on this. Like I said, until or unless we break down below some support here. So I do I do think that we're going to come up, and I mean, if you're just looking at this very short term minded, um, you know, Microsoft is almost certainly going to come back up and look at 385, 386. If we want to take this range here, a little bit smaller time frame here, we'll take this most recent swing high to the most recent swing low here. Um, I would look for a retracement back to 407. Above 407, we can maybe get the party started back up to 50% of this whole range here, and then obviously back here. So I think this is excellent risk versus reward as long as these levels hold here. But if you wanted to trade this, there's a lot of flow, and I know Michael Burry's got, I don't know, leaps out in 2027 or whatever. Um, but you don't have to position that far out. I mean, you can go, let's say, 2, 3 months, 6 months out if you wanted to try and play this bounce here. And obviously just have a tight stop. So below, weekly closes below this level here, just stop out. It's okay. Reassess. But nice risk versus reward on Microsoft as long as these levels hold here. A reclaim of the 200 weekly, I think it would be a really solid catalyst. Um, so that's something I'll be watching this week. Um, what else are we looking at? There is Oh, Lily's already. Um, I think I've already put out ideas for Lily. Oh, yeah, some of the consumer services. So McDonald's, Disney, Burger King, Starbucks, Coca-Cola. These are all safe, safe haven stocks. Some rotation. We talked about healthcare, UNH, another one. Some of the financials. Um, JP Morgan. Let's take a look at JP Morgan. It was down on Friday. But, trading at, so weekly wick, coming back down here. But this is pretty constructive, honestly. Um, trading at pretty much previous all time high. So we're kind of still, this is the way that I look at this. This is previous all time high. We're kind of right there still. So I technically would say this is still trying to break out. So the way that I would look at this here, again, I would just take 50% of previous week's candle. So support at 326.93, and then 50% 335. See if we can play this back up into here. If this bounces a breakdown, obviously we've got support at previous week's candles here. So we look to the previous week's high as our first support, which is right below support here. So 325, and then the extension down here at 316. So this whole move here, excuse me, I do like the look of this. Just going to show you why. Let me get rid of this so it's a little cleaner. Talking about golden pocket, etc. Right? So you got swing high, swing low, and if you look here on the structure, there is a little change of character here, but you still have higher high and you have a higher low. So I think we're still going to put in another higher high, which is constructive. And if you see here, basically we retrace back up to 618 level, and then we close back up above. The fact that we closing weekly candles back up above the 786 is constructive on this move here. So this 325 level, I think on JP Morgan is probably going to be pretty good to watch for a trade idea. Hold of the 786 level would negate the reversal. Close back down below here, then we'll start looking at trading back down into some of the lower levels. But I do like. Let's look at the daily candle here. This still kind of looks like a flag. Um, you got kind of a flag right here, kind of still breaking out here. Then you got another, kind of potential flag looking like this. Flag inception, flag inside flag. So one of the financials I would maybe look at is JP Morgan, might be good. There are also some squeezes that I wanted to talk about if you're interested in that. And let me see here. What's interesting is some of the crypto. Obviously, we talked about Bitcoin. We can take a look at Bitcoin. Um, is and was getting rejected at the 200-day. But some of the miners on some of the crypto stuff are looking interesting. And this is one of them. Riot, you can see here on the monthly. We've got one of these kind of multi-month breakouts here, something like this here. And then if we bring up the squeeze, I'll show you why I'm interested in it. Let me go to invite. Here's ready and fire, and here we go. Okay. Oh, I don't know why there's 15 of them on my chart here. Hold on. Get rid of this stuff here. Get rid of that one. And get rid of that one. Okay. And then I like to have RAF above the squeeze here. Okay. So this is why I'm looking at this. It's looking like it wants to retest, the 200-day moving average, but breaking out. And we have a ready, aim, fire, mid, buy trigger here, and we have the monthly firing up here, histogram up, fire up. Weekly, it's in a weekly squeeze here. And the daily is like the near term signal here. So, and this is what usually goes off for my scanners, and this is what gets me interested to kind of get into things for breakouts. So here is, ready, aim, fire, print up, and then here's the squeeze. We got, it's been building 1, 2, 3, 4, 5, 6, 7, 8. So if this thing fires up here, kind of keep it simple, but let's just look at our fibs here, breakout of this whole range here. I think 35s, above 28, 41, resistance is 30.26. So above 30.26 though, nice, probably get some nice expansion. You can see basically kind of similar action, once you're consolidating, and you get these signals here, ready, aim, fire, and then the squeeze, and then you get this trajectory that kind of makes this thing kind of bounce. So I think this is interesting. Kind of been consolidating here for most of May, and yeah, good volume here on this candle here, and I think that's one that's worth looking at. Like I said, that's on my scanner. Some of the other ones that I did post, I think in the channel and some on X, but another one is, I'll go over some of these with you right now that I haven't gone over. FROG. Here is another mid buy trigger, and then you get the squeeze here, and this is kind of pressing up here. I mean, that's a lot of volume there, and a breakout here. So FROG, and I don't even know what these people do, but this whole range here. Looking at potentially 97, 98 on a breakout here is the 1618. Might get some nice follow through on that. Another one is O'Reilly Auto Parts. And some of these obviously are more liquid than others, and this is one of those ones that I don't love quite as much, but a lot of volume on the daily at support. Kind of got a little, I don't like this one as much, but just to give you an idea, some stuff that's going off on the squeeze here. I wouldn't, honestly, like, I'm not going to trade O'Reilly Auto Parts. I'm just giving you some ideas of some setups here. Support at 84, resistance upper trend line. So we got high volume um, candle here. I mean, look at the volume on this candle. It's the most volume that we've had in quite some time here. Um, so that's significant. I like watching, significant volume on moves off of bottoms here, potentially putting in a local bottom here. And then let's say we break. Obviously, a good target would be around 95. That's the 200-day daily. But from a fib perspective here, there's not much of that left there. Fib perspective here, 96 lines up with previous resistance. And then obviously, you know, once once you start breaking out on some of the lower time frames, we just basically will look at the weekly and the monthly, and then it's you know this looks pretty good on a higher time frame chart, right? Weekly looks pretty good here. This is important support here, so you can see why there's a lot of volume coming up. Somebody must think this is a good value here. Here's your, this is basically what I'm looking at here. Nice support here. So, break down below, obviously, 85. Come back down to test this weekly 200-day moving average. But good volume and some good signals on the Ready Aim Fire and the Squeeze Pro. Another one is I think I brought this one up before. MasterCard. No, not MasterCard. I'm sorry. Let me bring this up here. Yeah, MasterCard. There we go. MasterCard Incorporated. Okay. So again, to quote, Charlie Munger, if all you ever did was buy quality stocks at the 200-day moving average, you'd probably be okay in the long run. So, good volume. Let me see here. Hold on. You can see here, blue line is average volume. So above average volume coming in here. We've got some weekly accumulation here. This might be a spring right at our 200-day. And the daily is what kind of tipped me off to it, though. Ready Aim Fire is telling me that I got a buy signal. There's a squeeze above average volume. So MasterCard, likely going to push up, test our daily 200, and then should we break out above that, then we get really focus more on some of these higher levels here where we're upper trend line resistance. So I like this a lot from risk versus reward, financial as far as financials line up with the sector rotation right now. I think this is a good one. GME did pop up on the radar. I don't usually trade memes that much anymore. It is kind of all over the place as far as the 200-day moving average. I wouldn't necessarily say that it's a quality stock. It's a meme stock. But as far as the daily, there is a daily squeeze, ready, aim, fire, trigger here. So holding support here. Obviously, this is like multi-year support. at this point here. You can see basically put in some higher lows starting back in July of 2024. You're going to get people saying that this is a big old flag. Could be. For those that are interested in trading memes, this might be interesting. So there's GME. Something else I was looking at, Crocs. Some of these names aren't that sexy, but the charts are pretty good. So here is a good example here. Daily, again, daily squeeze, ready, aim, fire, above average volume, looking kind of like a flag. You can do something like this if you want. Actually, you can just draw a box here on this one. And you can see here, and we'll pull this box back here. Gap. The gap, that's fill. So gap and go, maybe. I just like it because of the squeeze and the ready, aim, fire. Let's see here. Some other names worth watching. Let's look at this one. Here's another miner, crypto miner. This one, Hut. Again, this one's kind of similar, but squeeze. Let's take a look at the weekly chart here for a second. This one actually looks a lot more constructive. I actually was charting this thing back. I remember back in 23 and 24 down here, and I was like, oh, this thing's going to go pretty good. That was when it was $8, and now it's 122. Pretty cool. But here's our daily. You can see high volume there, and this thing kind of continues up, high volume, above average volume. So we got a squeeze, ready, aim, fire, trigger volume, and not that far off of all-time highs. Basically, we got a nice little triangle to play up here. All right. What else is there? Coca-Cola, I talked a lot about it earlier in the year. Again, some of these names aren't all that sexy, but the setups are there. So again, above, look at the volume, daily volume, right there, ready, aim, fire, trigger, and there's a daily squeeze. These are the ones that I pretty much, I have filtered. And these ones usually make a nice move near term, and then potentially they pull back. But then ultimately, they usually just keep on going. So yeah, McDonald's is doing pretty good right now. Excuse me. Let's look at had a pretty nice pullback here, but trading, not too far off all-time highs. That's our monthly. Nice pullback there into key support levels, Mickey D's. So yeah, those are just some names I would kind of maybe keep an eye on. Hopefully that's helpful. And if you look at the futures market, we are right back at our pivot. So that worked out nice. Um, all right, I'm gonna upload this video. If you guys want to check it out later, take some notes. Thanks for hanging out.